Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in. Take a look, see what is going on today. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com. I dive deeper into what's out there in the markets, share what I know about the markets with everyone in the community, give you guys opportunities that I see in the markets based off technicals and fundamentals and values, and share that with everyone in the community. Special is the coupon code if you're interested, and you can use special as the coupon code for both the monthly and yearly memberships. Here we go. United States Treasury. U.S. Treasury just bought back 10 billion of its own debt, the largest Treasury buyback in history. So this is Treasury debt buyback operation results. So that's what's going on. That was June 3rd, 2025. That they're in there buying. Remember, I said during the daily updates that they're probably in there doing something. Well, this is what we see after the fact. They are in there. They are buying. That's how they're trying to recycle maybe bonds back into it. It could be quantitative easing. I don't know. We'd have to look at the results later to see if things are easing. But they are in there messing around with the bond market. Peter Kraft says if you don't own silver, you know neither history nor economics. Well, I think there's another option there. Um, if you have a lot of money, you don't buy silver because it takes up too much room. Like you can literally stack silver in an entire room if you have a lot of money and you were buying it at ridiculously low prices. So if you had a couple $100,000 and you bought it at the bottom of 2000 silver, yeah, you're going to have a vault. I mean, that's a lot of ounces that someone had purchased. So it's not that you don't know neither history nor economics. You might just have too much money. And I know that that probably doesn't impact a lot of people having that amount of money, but silver does take up a lot of room, what I'll say. Patrick Karam says, since we're on silver, he says, okay, let me make this crystal clear. Whatever silver does right now, going up to 40 or even $50, it will pale in comparison to what it will do once it breaks out versus the stock market. The rocket ship moves aren't happening now. They're going to happen later. Well, I think they're happening now, and I think they're going to happen later. What I try to do is when I start to see these patterns, this is a double bottom pattern. You get a lead in, then you get one bottom, double bottom, and there's another double bottom within that. I try getting it like real low, and then I just sit in it. Now, some people say, well, that's an opportunity loss. Well, I mean, I bought it, a lot of it at like 15, $16 an ounce paper market. I bought a bunch in the 17 and 18s. And then I just sit. It's like my savings. And the reason I save in silver and platinum, I'd even include gold and palladium in there too, is because they can't print it away. It's my protection against the system being out of the system, and my protection against them abusing the currency. But yes, when this turns and we start to outperform the S&P 500, for example, yes, it's going to do ridiculous things. And yes, the S&P 500 could be chopping sideways or even moving lower to some degree. But it's not about getting it now. As the ratio breaks, I mean, I'm a little bit scared. A little bit. I'm a little bit scared for this to take off. I can't identify if this is a regular market move for commodities or if this is like a game ending monetary reset where we're going to hyperinflate the currency away. At some point, when this starts to move, and it could start to move rapidly, it might get hard to get the physical metals. So it says nobody is late. I mean, it could get a lot harder to get the physical metals. We could see gigantic premiums on top of the paper price. I've seen that before in history. Uh, and the weird thing is, the premiums went really big when they were at the bottom, which doesn't make any sense. Usually at bottoms, shouldn't people be chucking their silver, trying to get rid of it? But no, we had this big premium, so you couldn't really get it in the bottom of 2020. That also happened in 2008 or 2009 when it crashed afterwards. But here we are. And it says nobody's late. It might be to get the physical metal. I'd get my hands on this stuff. That's me. I would feel when I was accumulating, when I was first accumulating, I kept asking myself, do I own enough? What is my enough? And apparently, my enough is a lot higher than I think what most people probably think is enough. But I hit my targets, and then I went well over my targets as people were offloading it in 2020. People were offloading it um, even all the way up to 2022. You know why they were selling it? Because they wanted to get into technology stocks, and they've been sitting in silver and platinum. He had both. He said, you know what? It's just not going up. And that's exactly what I was purchasing from. I bought everything he had, much as I could, everything, which was good because I bought it all down here at the bottom. I bought it all at the bottom. And then you just have to be patient enough to ride it. It says this is stagflation. It says growth scare is over, inflation scare begins. April non-farm payrolls revised down. Average hourly earnings versus prior. Year over year, 3.9%, estimated 3.7. So this is stagflation. Yeah, you know it does well in stagflation? Commodities. This is perfect for those that know where the value is in the market and can just sit tight. Let these guys print money. That's what they're going to do. They have to. In order for the system to survive, they got to print money. They have to print money. This isn't it's not an option. And I'll talk a little bit about that later. But they got to keep going. Markets and mayhem. It says crude oil is starting to look very interesting here. If it can close above my 64.98 pivot point, then I think it can make a bigger run higher. Guys, we're sitting at a ratio of gold to oil above 50, and you're worrying about a 64.98 pivot point? Come on. Come on, come on, come on. Guys, this is when things get this cheap, it's kind of like you found this amazing deal. Let's say you're buying something, a car, and let's say you've been watching the pricing of a certain model car, and it's priced at say $20,000. All right, that's the fair value that you continue to see these cars being priced at. Then out of the blue, you have a desperate seller that wants to get rid of the car immediately. And they say, you know what, I'll take $12,000 for it. And you're like, you know what? I'm gonna wait and see if I can get it cheaper. And it's a really good car. Like, let's say it's in great condition, low mileage. In fact, it may even be a little bit better than $20,000. Why don't you just take it? Like, why don't you buy it? 12 grand. Um, that's kind of what I feel like a lot of these guys do with technical analysis. They're like, if we break through 75 different horizontal trend lines and we break through the initial downward trend line, then I would feel better and more confident. It's like confidence costs you money. Confidence costs you baggers on your return. Confidence should be in the pattern. Confidence should be in the valuation. The valuation trumps everything else, in my opinion. So when you come on down here, I'm trying to buy the head of this thing. And yeah, I may fail. I might have purchased it up here at $70. And then we took the liberation detour lower here and create a pattern. When I see the pattern, I recognize it, then you can get on top of it even more. When we go towards the end of this bull market, we are going to be laughing at the prices that we have today. We will say, oh my God, I should have just been buying non-discriminately. But everyone else is so worried about it potentially getting a little bit cheaper, which, I mean, we're basically at the cheapest time in history of the gold to oil ratio. Eric Yoon says they won't go up in a straight line. This is a warning. I think he's talking about gold, silver, platinum, some of that. Jamie responds with, what won't go up in a straight line? And here's the cup and handle here, very similar to what we've seen. This nice few-year cup and handle pattern, and then it just ripped. Just ripped. Look at the huge pullbacks we got here. Yeah, there was none really. A couple of consolidations, but they weren't huge pullbacks. I don't know if this is coming to America. I don't know that. But maybe something is similar to this. Maybe we get a pretty big move up, and all that the consolidations are kind of sideways movements. We don't get any large consolidations where or large drawdowns where it's 20% plus. We might just consolidate sideways. Maybe the biggest drawdowns are 8 to 10%, whatever it is. Be careful because if you get in this type of move and then you liquidate and you can't get back in because you sold your metals for 100, but now it's 1,000, that's in the same year. I mean, that you're pretty much screwed at that point because things are starting to go vertical and it might be harder to buy back in. You might not get the physical metal that you want. So I look at everything and I'm like, you know what? I'm riding this thing. I'm not going to sell out and get caught out, my pants down, if you know what I mean. Austin says, tomorrow wraps up the first 5 months of my kids attending the school where all of the learning is powered by AI and no teachers. I get asked almost every day what the experience is like. In short, it's truly wild. Here's what it's like overall. Texas private schools use new AI tutor, rockets student test scores to top 2% in the country. Now, I don't know. Here, my opinion, this is my opinion is I think it's highly dependent on the kids. So your test scores, you can't say that one method is better than the other if you give a bunch of really smart kids at a private school and then you say, oh my goodness, their test scores are in the top 2%. It's like, what were they before? And are these kids pretty smart to begin with? If the answer is they were really smart to begin with, we gave them AI and now they're just as smart as before, well, okay, whatever. At least we could get maybe savings in terms of teaching. But if AI comes and we start implementing AI all over the place, maybe the kids do learn faster with certain AI approaches. The thing that gets me kind of confused here is we're putting in AI to build all these things, right? We're building all this crap that people need. Who's going to buy it? Because if AI replaces all the people that were building it, manufacturing it, shipping it, and all this stuff, I mean, do we need? Do you get what I'm saying? Like the income of those people are now gone. So what's this intermediate step between AI making a bunch of stuff and people being able to transact for whatever is being made? Are we going to have these really rich people put in AI to all of their companies, and then what? We all, 75% of the workforce gets laid off, or 90% of the workforce eventually gets laid off, and then we can't buy any of the things that AI is making. That just seems kind of weird. It's like the chicken before the egg, or the egg before the chicken. Don Ricardo says he's in politics. Nothing stops this train. Lynn Alden, obviously, says, where is this guy today? Yeah, yeah. Nothing stops the train, baby. International oil rigs ex North America looks like it was down 6 month over month to 653 in May for Baker Hughes. There we are, chopping sideways and slightly lower on rig count across the world, obviously. I started laughing here, guys. I just had to laugh. So let's read this one real quick. He says, over the last 100 years, almost every recession can be predicted by either a budget surplus or a significant reduction in deficit spending occurring in preceding time frame. At the same time, national debt has been growing without any real consequence, and it will continue to grow. There are no bond market vigilantes out there that can take yields to unsustainable heights. That's because the government comes in and buys it. They suppress it back down. To oversimplify, deficit spending minus trade deficit equals private sector wealth creation. Says if there were a significant reduction in the deficit, there would be a collapse of the stock market, which will lead to a collapse of the bond market, which will then lead to even more massive deficit spending to try and pull us out of an even greater financial collapse. Simpletons such as Elon Musk, who wish to insist that deficit spending is bad, have no real idea of the function of money, the origin of money, the fact that sovereigns in a fiat world have unbelievably high thresholds of creating money. Quite simply, they're idiots. As I've said many times, do not confuse how a business or household should conduct its financial affairs with how a sovereign with a printing press should conduct theirs. It is complete lunacy to try and say that the United States should run a balanced budget, in his opinion. Now, he also goes, this is the same guy. He says, I just watched Lynn Alden do her BTC presentation. Sounds a lot like what we've talked about for years, but he misses some big points. Underestimates sovereign's ability to print. Asset bubble crescendo until 2027 collapse when US Treasury market implodes. And she says quite the contrary. They have and will continue to print tremendously. Otherwise, the train would stop. So I read this and I'm like, how could you listen to that and come to the conclusion that he did? Because I listened to that YouTube clip. She says nothing stops that train, that they're going to continue to spend. And he's like, oh, miss some big points. Underestimate sovereign's ability to print. That's exactly what she said. I just thought that was completely ridiculous that someone could sit through that and that's their conclusion. Ridiculous. Anyway, here's Julianne Geiger. It says, correction, Baker Hughes rig count, oil's down 5, but gas is up 5. Or oil's down -9, gas is up 5. So we've got that going on with rig count. Now, some people say, oh, that's bad. Then oil price should go down. You're not looking at that right, guys. Oil can go up even if the rig count continues to go down for a period of time. It depends what the market has priced in. It depends on future expectations. And it depends on what is being released in relationship to future expectations of the rig count. Welcome aboard, says Lynn. It says remarkable shift in Germany's fiscal trajectory. Nothing stops this train running deficits all the way forward. Germany's debt to GDP straight up. Everything else is a lot of countries look like that. Eric Nettles says, with an estimated incremental 1.5 million barrels per day of new supply hitting the market by Q4 2025, and demand growth weakening, short cycle U.S. shale production will need to fall to prevent meaningful inventory builds. This trend is beginning, but remains highly price dependent. That's the Permian and U.S. core oil started frac operations by week, and it's obviously down for the 2-week average and for Permian and other U.S. core oil. Keep in mind, though, guys, it's about what the perception is for people who are in control of big money. So you're not looking at charts backwards. You need to look forward. You need to look at the charts and see how people are positioning. The bottom is when the sentiment looks the worst. Are we at that point? Maybe we're already past that point. I feel like we're past that point. I think we could go higher in oil price. Feel like we're past by a couple of weeks even. Art Berman says OPEC Plus is incoherent, no clear strategy, no discipline, and no real communication. Analysts believe $50 Brent in 2025. I don't buy it, but hey, mind the meme, and says, what is OPEC Plus up to? The cartel is fast tracking the return of idle production even as oil prices languish. This is the type of stuff that comes out at bottoms. And that's what it's very difficult to buy bottoms because everyone is so easily influenced by all of this stuff. You can't go by the news. You can't go by what analysts believe. You can't do any of that. All that matters is what is the perception and opinions of people who are going to enter the market that control big money. That's all that matters. So how does one gauge when big money starts to buy? You can't use this. You can't use news articles. You can't use analysts. You can't use sentiment, which is going to be negative at the bottom. So you have to track what big money's doing, and the only way to do that is through technical analysis to some degree. And then you can ensure yourself, if you're going to take a position, that something is underpriced or undervalued. You can't use any of this. Joseph Brown says, for your information, the only way for the Treasury to do a buyback during a deficit is to issue more bonds. In other words, to pay off the $10 billion in debt, they had to borrow more than $10 billion from someone else. It's just a revolving chair game here. JC Parrott says, notice how there are people here that just make noise. They're useless and not even funny. Others are here to try to make money and add value to the community. ASC, Chief Market Strategist, bringing the heat today on the morning show, where we've got gold, which is our leader. Gold's our leader, broken out, and then you're going to start to see other things follow, like copper. And I most recently charted copper yesterday against gold and how it could be bottoming and working its way higher from the ratio perspective. I think copper looks good. Now, just because a particular commodity looks good, there may not be a great way to play it, in my opinion, the vehicles to play it. There's uranium, and uranium companies, a lot of them don't make any money. A lot of them are pretty overpriced. Doesn't mean they can't go higher, but your margin of safety is gone. Copper's expensive too, the companies, for the most part. Global container shipping rates spiked 41% in the last week, with the Drury composite jumping 1,018 to 3,527 per 40-foot box, a 5-month high. Spot rates have spiked as major liners have capitalized on the surge in cargo bookings to introduce peak season surcharges. Exporters and importers in China and the US are leveraging the 90-day pause on tariff hikes to front-load shipments to the US ahead of the mid-year peak cargo season. The Shanghai to LA rate jumped 57%, while other US and EU routes saw increases in the 30 to 40% range. Look what these tariffs are causing. They're causing instability in all of these rates as we try to figure out the certainty around tariffs. And if, hey, we've got a window, let's ship it all. It's just crazy. Nugget Capital Partner says oil continues to rally after the perma bulls capitulated and chased natty exploration production. It's hilarious. The NCP camp making bank here. I agree. The oil market's opening in 6 minutes. So this is the Eric Nuttall and those guys. I think oil looks great to me. Chart looks really good. Here's some more. So it's not just the United States that's in a bull market. It's Earth. So Canada, new all-time high. Ireland, new all-time high. Looks like Peru doing an all-time high and Tel Aviv. Now, you know what the big factor is in a lot of these? Just money printing. It's currencies that are falling off a cliff. And it's pushing asset prices higher of all sorts of things. And the dollar is a big part of this. When the dollar drops, people will move out of dollar denominated assets into emerging markets and other currencies that will be stronger than the dollar. It front runs it, and that's what these patterns are. Peru looks really good here. So does Ireland. Yeah, these all look really good. Peru looks pretty good. This, whenever you get a flat top like this, and then you break out, you could get a big run out of this. Looks good. Print futures AM update. We've got dry bulk that's down. Capesize Panamax 2%, 1%. Tankers, VLCC's down 1, and Suezmax is flat. We've got Elon Musk here. He says the big ugly bill will increase the deficit to 2.5 trillion. Got to understand the way our money system is set up. We have to do this. Nothing stops us trained. We need to keep the system alive. If you cut the deficit, you're going to get a massive deflationary crash. That's the problem. And you're going to have a bunch of bad debt out there at that point, which makes it deflationary. Savage silver. In 2011, it took silver 6 weeks to go from 35 to 50 bucks. How long will it take this time? I don't know. I don't think this is very useful. All I would say is it's going to go up. Do we get a pullback? Maybe, maybe not. We don't know. The quicker that you adopt a strategy where you don't know the future or you're not trying to predict what it's going to do, the better you become. And that's where Buffett and Munger and Lynch, what they realized over the quadrillion years of Buffett investing and whatnot, is that value is the only true thing that you can use, where you get a disconnect between price and the value of the business, and you can reliably buy it when it's cheap. Just sit. Everyone else who's trying to make predictions, generally it doesn't work out very well. Day traders don't make jack for money. Almost all of them go bust. Well, pretty much all of them. And then the longer time frame that you adopt, the more successful the person is. It's that simple. And you know what? People don't want to adopt the longer term time frames because they want to get rich quick. They don't want to do any effort, want to get rich quick, and then it backfires on them. Everybody loses money because at some point you get wiped out. Dry bulk. Last year, global approvals of coal-fired plants rose to their highest level since 2015. And that's, remember, dry bulk. So as these go up for coal, we got to ship it. Coal-fired power going up or shipping. Coal and iron ore are the two big ones for dry bulk. And that's what we've got for today, guys. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Use special as the coupon code if you'd like to join the website. And that's all I've got for today. So we'll catch you next time. This is Finding Value.